Welcome to Kaiser Watch with John Kaiser. I'm your host, Jim Goddard. John, what's coming up on the show today?
Well, Jim, this week gold made another record high, but we're not going to talk about gold. We've talked enough about gold. If people don't know that they should be loading up on Vista Gold Corp, well, then I can't help them. Today we're going to talk about rare earths and the Chinese decision to restrict exports and what this potentially means for the another Rare Earth Mania 2.0. And we're also going to talk about a new development in the Toodoggone District rethink play.
So what are the impacts of China's export restrictions on heavy rare earths, and what kind of an impact is that having on metal prices?
Well, what happened about a week ago when the tit-for-tat tariff war escalated so that it's now 145% tariffs against China by the United States and 125% tariffs against the United States by China. At the same time, they put out an announcement that they are adding export restrictions to a group of heavy rare earth metals and scandium. And last week we talked about scandium, which they have added to the list. And export restrictions means it's not like an export ban as they did in 2010 when they got upset with Japan over the Senkaku Islands. This has to do with the groups that want to export these rare earths from China to the rest of the world. In order to get an export license, they need to fill out paperwork demonstrating that these materials are not going to go to any U.S. military applications. And that is, in effect, a de facto blockade, because how do you demonstrate that it's not going to go? I mean, you could export it to an importer in Europe who then redistributes it to who knows where, what group we're doing with what. So these materials, which are relatively small volume, it's not like you've got a freighter full of copper or aluminum or iron or steel or something like that. This is going to be very difficult to actually enforce. So what it means is that it's just not happening. Now, the metals that they added, the rare earths that they added to this group are samarium oxide, which is a light rare earth, and it's also used for obscure magnet applications. It added gadolinium oxide, which also has certain magnet applications. That starts wandering into the so-called heavy rare earth group. Terbium oxide and dysprosium oxide. These are doping agents for the permanent magnets made with the light rare earths neodymium and praseodymium. These they have not put export restrictions on, but they have for these small ones. And it's difficult to tell what the total value of the rare earth market is. In 2024, the USGS says that there were 390,000 tons of rare earths produced, of which China produced 69%, the United States 11.5%, and then Myanmar with about 8%, and then it dribbles off to a bunch of small producers. But the bulk of that tonnage will be cerium and lanthanum, the light rare earths that are very abundant. And lanthanum's now 60 cents or so per kilo, and the cerium is $1.50 per kilo. The value that they represent, and they are usually 60% of any light rare earth deposit. It is a fraction of the value, so it's very difficult to tell. Now, the heavy rare earths in these light rare earth deposits are a tiny percentage of the total rare earth distribution, except for certain heavy rare earth deposits. Some of these ones that have during Rare Earth Mania 1.0, which ran between 2010 to 2012, deposits like Strange Lake in northern Quebec, they have a very high percentage of heavy rare earths. So the dominant rare earth in that group is yttrium. Now, they did include yttrium in this restricted category. Yttrium used to be quite important, but in the lighting sector, but with the LED innovations that have happened, it has become less important. However, it's one of those rare earths that has all kinds of R&D going on, and who knows how important it could eventually become. But the terbium and dysprosium are problematic because they are required as a doping agent within these permanent magnets to keep the magnetism working and under high temperature conditions. And of course, that makes them very important for any military applications like missiles and so on, where you might expect to see high stress, high temperature operating conditions. They also added lutetium and to it, which is the most rare of the rare earths, and it's fairly expensive, about $740 a kilogram. This is used primarily in medical type of applications. But the significance of this is by having a de facto blockade, a paperwork blockade, this means that elsewhere in the world, you just can't get these metals anymore. So it's an indirect way of blocking the United States from getting these materials except through smuggling channels. Now, when you look at the rare earth prices that are published through these various outfits, the rare earth prices have not responded at all, and these prices reflect what they cost to export from China, or at least to buy in China and use for Chinese domestic operations. China makes most of its money downstream in the magnet sector, which it pretty much controls, and it's also put export restrictions on the magnet sector. So this is a potentially big problem for the electric vehicle sector outside of China. But the difficulty they have here is the Europeans, everybody's been kind of buying up these rare earths for the past year, stockpiling them. But whatever is out there in Europe and warehouses and that, it's suddenly not available. So although you won't see it in the published numbers, which are basically created by, canvassing all the different traders and suppliers, you will see those prices, but you will not see what's happening in Europe. But apparently, the prices have more than doubled for a lot of these rare earths. So the question is this going to light a fire under the rare earth sector? And this create, what I've called Rare Earth Mania 2.0. I don't think it's going to do that quite yet, because we do not have the optics that we saw back in 2010 when we could see both the domestic and the FOB prices, the export prices for the rare earths go sky high to like absolutely insane levels. And I'll have all the charts showing what it did 10 years ago compared to what it has done now. The rare earths all went for a bump between 21 and 22. We're up quite nicely. They've all crashed down. They have not yet responded. However, the market is starting to think, okay, this tariff war has no off-ramp for either the United States or China. China, as I talked about last week, it's going to dig in for a fight to the finish. Its people have the capacity to absorb far more pain than the American consumer does. So this is a showdown basically between Chinese consumers and American consumers. Who can take the pain longer before telling their leadership to stop? Now, in the case of China, they have huge export capacity, and they would be happy to stop the tariffs if the United States would stop the tariffs. It's impossible to predict how everything will play out. There's another area that's becoming a really big problem, which is semiconductors. Most of the semiconductor fabrication takes place in Taiwan, and Taiwan makes chips for groups that design it elsewhere. And that also increasingly includes China, which has TSMC make a lot of its chips for its growing semiconductor business. So what's happened in the market in terms of stocks responding? Well, the American champion, MP Materials, which mines the Mountain Pass, it's still working on figuring out how to crack this stuff and separate it on American soil. But it ships its concentrates to China, where they get processed and separated and probably sold somewhere else. Who knows where? So that's not really a source for the United States until they build all the separation, the cracking and separation capacity in the United States. Now, Lynas Rare Earth is the big producer that stuck it out after Rare Earth Mania 1.0. It was backed by Japan, and it is starting to rise. Its output is primarily light rare earth output. It does have a part of its well deposit that has an elevated heavy component. I do not know where they are in getting that developed. They are working on developing separation capacity in the United States, in Texas, which is a good thing. But this one has the one that would benefit in the market the most. But the question is all its output allocated to Japan at offtake prices? And the problem has been that the China price for rare earths, it is just too low for almost any deposit outside of China and its immediate neighbors such as Myanmar and Vietnam to be profitable. But the one to really watch is the KRO favorite, Aclara Resources, Inc., and it has two projects. One is what they call the Penco module, which is in Chile, and that's had opposition from the wealthy neighbors and that they don't want this big open pit mine in their backyard. And these are also these ion absorption clay deposits. And China, its heavy rare earths come from these ion absorption clay deposits from the Longnan deposit has been a big source of it. And it is primarily a xenotime type of distribution with hardly any of the light rare earths in it. Now, maybe a critical metals has a similar distribution of xenotime at its Loftal project, and that stock has popped up a bit from the gutter where it is. A couple of years ago, its partner is Jogmec, and a couple of years ago, Jogmec had spent all the money to vest for its interest in it, and it made it a sort of available for Japanese industry to bid on it, to develop it, and nobody was interested. So it's still Jogmec working with Namibia Critical Metals on this project. But this is in Namibia, and it's a potential important source of the heavy rare earths, and they've been pushing that along through the various feasibility stages. But Aclara Resources is part of this new trend looking at these ion absorption clay deposits in Brazil. And the one that sort of kicked it off about 12 years ago was Serra Verde. And this was backed apparently by American money. It's a private company, so there's very little information available. And however, from reading from media reports, it looks like all their output is already allocated through offtake agreements, but it's private. But the Aclara Resources new project, the Carina module in Brazil, is similar, but what's unusual about it is that it has a meaningful dysprosium and terbium content to it. Most of these Brazilian ion absorption clay deposits have just a traditional light rare earth distribution, which is not going to get you the heavy elements. So Aclara Resources started to move this week. It was at 70 cents today. In February, they did a $25 million U.S. financing at 70 cents Canadian, while the stock was in that sort of 45 to 50 cents range. The dominant shareholder, Hochschild, took a part of it, and CAP SA, which is a Chilean conglomerate that does not just iron mining, but also has various fabrication businesses. Last year, it invested $29 million into the subsidiary that holds the Penco module. It stepped up as part of that. It has the right to maintain its 9.9% interest, and it can actually go to 19.9% under the right circumstances. So Aclara Resources for the Carina project, it is now fully funded to deliver a pre-feasibility study by the middle of this Q3 of this year, and it's also doing work to support a feasibility study. So this project right now is the most important rare earth project outside of China that's being pushed towards production that can also deliver a meaningful percentage of the heavy rare earths that the rest of the world wears. So this has been my sort of go-to pick if you want to bet on Rare Earth Mania 2.0. And the stock kind of did nothing while all this stuff was happening in the past couple of months, but it is now waking up, and it's trading at the financing that KPSA, Hochschild, and a new group called New Hartsdale Capital did earlier this year. I mentioned I talked last week about Sunrise Energy Metals and Scandium. Scandium got added to that list, and again, you'll wonder, what is the reaction to the price? Well, I finally found a series of prices for scandium oxide, and it only goes back to about 2022, and it's quite pathetic. It sort of starts at $900 a kilo for scandium oxide, apparently 3.9 purity, and it's sort of $741 a kilo. Now, none of these projects like Scandium International's Ningen or even the Syerston of Sunrise Energy Metals really is going to work at $750 a kilo. But this is just what the sort of surplus is available at in small amounts. It's not a scalable amount. You could not get 100 tons of scandium oxide out of China from its titanium stream waste stripping operations at $750 a kilo. So this is the problem with these rare earths and these and obscure metals such as scandium, is that the China price cannot be the basis for working out your economics. And one of the positive things that might come out of all this turmoil that Trump has unleashed is that it is forcing the rest of the world to start bifurcating the metal prices. There is the China price for stuff supplied by China, but if China's going to wall itself off into a separate economic zone from, say, the global West, the global West is going to have to develop its projects with a higher price than the China price, so that there is a profit margin available to justify not just building the initial capacity, but eventually expanding it for when demand goes on. Now, I talked about Sunrise Energy Metals last week because the stock had started to sneak up. It was at 30 cents and closed last week at 40 cents. On Wednesday, it hit 71 cents, and it was halted. Actually, it was halted Thursday. It hit 71 cents on Tuesday, and it was halted on Wednesday, the 16th. And at the request of the company, there is nothing out yet. It will resume trading on the April 22nd because the Australians take both Good Friday and Easter Monday off as a holiday. So this is now a window. So whatever it is, something was getting the market excited. And as I mentioned last week, Bloom Energy is the biggest consumer of scandium oxide, and with China putting it on this list, it's questionable to what degree Bloom Energy can still get the supply that it needs to make its solid oxide fuel cells. And there is, of course, an obscure use for scandium in the military, and it's possible they may even have an offtake deal that establishes a meaningful price to develop Syerston as a world-class, scalable, richest and biggest scandium deposit in the world.
What are the implications of Freeport's Finlay deal for the Toodoggone District rethink play?
Finlay Minerals has been in my bottom fish collection. I've talked about it in past episodes of Kaiser Watch. They have a key property called the Pil, which is just to the northeast of the Aurora discovery that A-Mark Resources and Freeport made late last year, whose assay surprised everybody in January 20th, when they released the gold content. The gold content for this porphyry copper gold system, it's in the 1 to 3 to 4 gram per ton range, which is 5 times higher than what the chemist copper gold system is that Centerra operates to the south. And Freeport had spent $33 million, largely coming up with marginal low grade copper gold mineralization in the Pine Trend in the southern part of the Joy project, and it is very close to vesting for 60%. A month or two ago, A-Mark Resources did a deal to acquire the Brenda project, which is just to the east of the Aurora discovery from Canasil. Freeport has the right to under the area of interest clause to basically have the same terms as its farm-in on the Joy apply. The big question everybody's waiting for an answer to is, will Freeport stop at 60% after it spent $2 million to reach that $35 million threshold and form a 60-40 JV with A-Mark? Or is it going to spend another $70 million or something like that to go to 70%, which anybody doing the mental math is saying, well, that doesn't really make sense. Better to just get into a 60-40 relationship. And then there was even the question is, are they going to participate in A-Mark's farm-in on the Brenda project? And there was even a worse scenario where they may just stay at 60-40 and do nothing, play a long game. Because the problem with Aurora so far, its scale is like a couple 100 million tons. That's not a Freeport scale type of story. So the whole idea of the Toodoggone District rethink is, if we're getting these types of copper and gold grades here in what was essentially a blind discovery, is there more to the Toodoggone District than what has historically been understood since the chemist deposits were discovered in the early 90s? And I think this decision to farm into Finlay and this deal, which was announced today, Finlay still halted, allows Freeport to earn 80% of both the Pil and the Atty property. The Atty property is to the south of the Joy project. It adjoins the chemist project of Centerra, by spending $25 million over 6 years and paying $3 million cash. And in the Atty, and they're treated as separate deals, they need to spend $10 million over 6 years and pay $1.1 million to earn 80%. Now, what's very disappointing about this news release is that there is no breakdown of spending requirements. Do they need to spend all this starting in a couple of years? Is there a minimum requirement for this year? How much of that cash will Finlay Minerals get up front? And, netting 20% in this is not particularly exciting for those who hope that there might be a lot more to the Pil ground than has so far been found by various partners. But they do have the Silver Hope and the Say projects that they've had. The Say is more recent, but the Silver Hope they've had for a long time, where if they can get some cash in the treasury without having to dilute at cheap prices, they could get a story going while Freeport goes to work on the Pil and the Atty to see if the Aurora-style grades are present there also. And I think this is a positive development, because if Freeport did this deal, that means it's thinking long-term that it does want to consolidate this district. It will have to offer it to A-Mark. There's probably 45, 60 days for A-Mark to make a decision. That will be long enough for A-Mark to learn whether they're in a 60-40 with Freeport, or if Freeport's just going to dominate everything and go for 70% by spending the extra $70 million. So I think this is a very positive development for the play. And of course, it now means that TDG Gold Corp, which I also graduated to the favorites collection from the Bottom Fish collection earlier this year, it is now the junior to play, because it has significant potential on the Shasta project, the Shasta Baker project. They will be getting in there late May, starting to do more geophysics to refine the targets. They raised $15 million earlier this year. So right now, of all these companies, TDG Gold Corp is the one that represents the best bet on the Aurora discovery, not just being a localized freak show, but being symptomatic of what the entire Toodoggone District is capable of. If you start looking in these areas that are more where it's undercover, where it's not so obviously sticking out of the ground, this is what the Toodoggone District rethink play is all about. So I think this is a positive development, even though I'm not particularly excited about the terms of this deal and the lack of disclosure about what the spending pace will be for the Pil and the Atty project of Finlay Minerals.
John, thank you so much for the update.
You're welcome, Jim.
We've been speaking with John Kaiser. I'm Jim Goddard. comments made on Kaiser Watch are an expression of opinion only and should not be construed in any manner whatsoever as a recommendation to buy or sell any financial instrument at any time. Archived online at kaiserresearch.com.